Welcome to the indices, and here we're looking at the S&P 500 on the 2-hour chart. And look, as you know, we've been looking at this particular rally up through here, and our target is the 1850, the 61.8 retracement level. And on this particular market here, it looks impulsive to the upside in terms of 1, 2, 3, 4, and 5 to here, and then the pullback, and then further up. But on the cash market, this part looks more corrective than this market. So I'm still going to run with the market being an A and a B and a C up until this point here. On the downside, we would need to see the market fail at 1850, and we would need to see a small 5-wave structure to the downside like that. And the shorting side of it would be seeing a corrective move back up in 3 waves, and then the next move down would come from that point. But while we're here, on the positive side, I just got to point out a few things as well. We need to keep all the counts on the table until proved otherwise. So the move down from the high here at the 1900 in reality is in 3 waves. Okay, so it does make a nice looking A wave, B wave, and C wave through here. It would only be confirmed as that if this price went up through here and took out the high here on the cash market. Technically, this wave 2 can go all the way back up to here, but can't pass the top of that point there. The indicators, the stochastics and whatnot, still have this as an sold situation, so there is potential for this market to move to the upside. So if the market moved through the 61.8% retracement level on the cash market and develops support on top of the midpoint here, the 1850, because this is the most important number here as such. It's the strongest number between the 1800 and the 1900. So if it becomes support, then the weight of it shifts to the upside. So what is support? Support is not just a simple fact of trading above the 1850. It's actually making a move above it and then coming back and finding support on it. And if it fails to find support on it, then you start looking for the 5-wave structure to the downside. So just sort of drilling into this somewhat here, the ABC correction that we're looking for here, this is it here. Look, this is basically the C wave that we were looking for, and this C wave here needs to be in 5 waves up through to here, so you'd need to do a little bit of counting there. It's probably not finished, and I was looking at the Dow Jones here from a little bit earlier, same picture here on the 4-hour chart, but just drilling in through here, and I'm using this one because it's a little bit stronger. So the C wave coming up here and looking at that in 5 waves, and this is not quite finished. This is just on the 2-minute chart here. So if we just sort of play with this for a second here, I believe that's the 4th wave there, and we're looking for 5 waves up. So we're looking up for 1, back for 2, which is this one here, and then we're looking for the 3rd wave, which is this one here, and this would be the 1, the 2, 3, 4, and 5 into here. So we'll be looking for the 4th wave in a bit of a nutshell, and the 5th wave should be about the same length. So we should be able to get up to, I don't know, 1830, 1850 up through to here before it fails. So it is this retest here that we would be looking for. And of course, if you're tracking that, then there'll also be the bounce off that. But if you do get a 5-wave structure in here and then a 3-wave counter trend, at least you will know you're going to get another 5 waves through here. So all you need to do is keep the stop above this particular corrective rally at this point here. Yeah, so that's it in a bit of a nutshell. The DAX, however, has got a slightly different picture here, and also just as interesting in terms of it now from this 97 high up here, it has a very clear 5-wave structure to the downside. Now, on this market here, it looks like on the CFD, it appears that this strong move up through here in the last sort of, 2, 4, 6 hours, 5 hours, is, quite strong. But on the cash market, it's not. And it appears that there is another little wave to come down. So down for 1, back for 2, 3, 4, 5. I'll just see if I've got that. So we can expect to bounce off the 9, off the medium level here, 9,000 or close to it as such. And that bounce would be an A and a B and a C coming back up through to this way here. I just don't know if I've got that on here. So yeah, it's not that clear. It's clear on the cash, but basically we're looking at down for 1, back for 2, down for 3, the back for 4, and down for 5 here. Even though this has gone a little bit sort of high up here for a fourth wave, it hasn't on the cash, and that's why I need to take it on and sort of accommodate the leverage swing, so to speak. The FTSE is in the same but different, and in this case here we'd been looking for, well, we'd been tracking these 5 waves down through to here, and then we're looking for an ABC correction. So in one way or another, a little bit sort of rough, but the A wave up to here, the B wave here in 3 waves, and once again the C wave here, very much like the other indices as well, so we can expect that to move up there. But then we're looking for failure at that point there, but that failure needs to be confirmed. So once again, we'd be looking for an impulse wave to the downside. It's not that you miss much by waiting either, you know, so because you get 5 waves down, and then you'll get the 3 wave counter trend, which would be the retest of this. And then, you know, once you know you've got 5 here, if you can read, sometimes you can read it really clearly, other times it's difficult, I know that, but you might be able to read that, or you might be able to read that, and you could see that there's 3 waves there, and well, what makes those 3 waves? Well, it'd be this one here overlapping this one here, wouldn't it? So, you know, all you need to do is put in less money and have a wider stop. You know, it's a normal story. And the Australian market, the ASX 200, as you know, we were looking for a corrective pattern as well in terms of a 3-wave A wave. The B wave here is quite nice, it's in 3 waves, and then the C wave up here. So this C wave up here would be much the same as the Dow Jones that we just pointed out as well. The 50% retracement level on 61 is up through here, but we've got this big block of price activity here, which would, you know, have the most volume in it. So, you know, if you're running volume in from the side, so to speak, this would probably where it would have the most. So it would be the resistance. So unless the 54.30 became the support, then we just continue with this being a bearish scenario and this being a corrective rally through here. So yeah, just drilling into that a little bit. There's some China news coming out today too. I can't remember what time, it's 12:30 or something, or 1 o'clock. So looking for, I wonder if I can just drill in here a bit further as well. Okay, yeah, look, exactly the same pattern as the Dow really. We've got just bear with me a second here, let's get all these things out. I think that's the top of the 3rd wave here, so that's the 4th wave here. So we're basically looking for, I can see we've got 1 here and 2 here, and then we've got in the 3rd wave 1, 2, 3, 4, 5, and then the 4th and 5th. So we're looking for something like this structure here. So look, it may not even move that far higher as such, maybe to the 54.10, you know, and really start struggle. It's going to struggle in here anyway, you know. Yes, I know the cash will open, and this will move up, but it's sort of priced in. So it'll be interesting to see what happens after 11:30. I mean, most of the volume in a market, well, Australian market, would be in by, you know, 11:15, and you know, then it's quiet for all of that period, but you'll have that China news coming out at 1 o'clock, and then, you know, the volume starts to come back in at anywhere from 2:30 to 10 to 3, I guess, and have that afternoon sort of session. So it's really sort of imperative to see after, you know, 11:15, 11:20, 11:30, to see what volume, if volume is still coming in quite strongly, well, then you know that it's going to be a large volume day as such. Right, okay, well, that's it. So look, once again, in this particular case here, we're looking for, you know, you want to see something like this. You want to see a nice, if you're going to be trading short, you know, catching a next decent trend down, if that's going to be the case, you need to see this picture, and then you need to see some sort of counter trend here. And it's not about getting in at the best price. If you can scatter contracts at different prices, it gives you a bit of it just gives you more flexibility in terms of managing the situation, because you can always just be not thinking of the money, but just thinking of adding and reducing, small positions at different prices. All right, cheers.